Welcome to Lunch Money. Coming up, will mortgage rates keep falling and how low can they go? Inflation has dropped back below 5%, so what happens next? And stick around to find out if a stuttering British luxury fashion brand is back on track. Hello, I'm Simon Lambert. Joining me on today's Lunch Money is This Is Money's Helen Crane and Victoria Scholar from the show sponsor Interactive Investor. Helen, the rollercoaster ride for mortgage rates this year has been quite some event. Before we get into a discussion about why they're now falling, having spiked over summer, can you just give us a bit of a picture of what's happened this year?
Yeah, so as you said, there's been some real ups and downs. Mortgage rates started the year actually falling. So this was off the back of a big spike at the end of 2022 with the mini budget, where rates rocketed to about 6.5% at their peak, then started coming down for quite a while until the summer of this year when they spiked again, actually even higher to about 6.8% at their highest peak. And that was because banks panicked a bit. They saw inflation not coming down as quickly as many had expected, and that led them to hike their rates up again. Since then, they have been coming down. So as of today, the average 2-year fix is 6.19% and the average 5-year fix is 5.78%. So it's looking a bit more positive. And again, those are averages, so much cheaper rates are available, especially for people with more equity in their homes.
So since that inflation panic over the summer, the base rate has actually risen, hasn't it? It's then paused on the last two occasions. Why have mortgage rates been falling at the same time as base rate has remained high?
So mortgage lenders base their fixed rates not on where the base rate is today, but on where it's going to be in the years to come. So mortgages are fixed for terms normally of 2 years and 5 years. So when banks set their rates, they're looking at what's going to happen to the base rate over that period of time. And it brings in things called swap rates. So these are essentially financial market rates which make predictions about where the base rate will be. So at the moment, the 2-year swap rate is 4.66% and the 5-year swap rate is 4.12%. So banks are looking more in that kind of area when they're setting their mortgages on fixes for the next 2 or 5 years.
Predicting where interest rates will go is a cottage industry, and predicting where mortgage rates will go is as well. What are the thoughts from the analysts and the mortgage brokers who are looking at this? How low do they think mortgage rates will go? Are we going to go under 4%?
So I think there are some more cuts to come from mortgage lenders. We've actually seen some this week from the likes of HSBC and Halifax have both brought their rates down a little bit. Banks at the moment are cutting sort of little and often. They're not doing huge cuts, but every couple of weeks you're seeing lenders come out with more marginal cuts. In terms of where they'll go, brokers at the moment are saying 4% is what they're kind of working towards, and that will be probably later next year. I think they will get to that level and then probably peter out, but obviously again that depends on what happens to the base rate at the end of next year.
And people who are either remortgaging because their current fixed rate is up and they're staring down the barrel of much higher payments, or people who want to move home, or first-time buyers, they're all watching this very, very closely, aren't they? What's the advice for people in that position who find themselves actually needing a mortgage at some point in the next few months?
I think the advice is to act early. So if you know you've got a remortgage deadline coming up, or you know you're going to be looking to buy a new home, speak to a broker ahead of time. They can let you know what the best rates are that you might be able to apply for. They can also have access to exclusive rates that only brokers can get. And they can also give you a bit of guidance on what kind of property price you might be looking at and what you might need to do in order to qualify for the best possible rate that you can get.
Thank you very much. Victoria, inflation coming down has been a major factor in bringing down those mortgage rates and those interest rate expectations, which have swung around quite substantially since the summer. We had some good news on inflation, didn't we, yesterday? Tell us about it.
Yes, we did. We had the official UK inflation figures and we saw a near 2 percentage point drop in the headline rate of CPI down to 4.6% in October, which was a 2-year low. We also saw that core inflation eased to 5.7%, which was the lowest level since March of 2022. So some real significant moves from the highs that we saw in October last year when inflation was above 11%.
And what's been driving this decline in inflation?
Well, a lot of this is to do with the drop in energy prices. We've seen that gas costs have come down by 31% over the last year. Electricity costs are down by nearly 16%. Now, they are still higher than where they were 2 years ago, but still that easing of energy costs has helped to bring down that headline rate of inflation. We've also seen that food inflation has eased, with some essential items actually falling in price, like milk and cheese and yogurts and crisps. And we saw that food inflation eased for the 7th straight month, but it is still stuck in double digits. It's still at 10.1%. So again, there is still some way to go, and overall inflation is still quite considerably higher than the Bank of England's 2% target.
So Rishi Sunak would obviously like to take credit for having halved inflation here. Some of it might actually be maths, it may seem, and just the fact that prices are rising at a slower rate than they were last year, or have come down slightly. He probably can't take credit for bringing inflation down in the US. We also had some US inflation numbers, didn't we? What's happening over there?
Well, inflation in the US is a bit lower than where we are here in the UK. It's slowed to 3.2% in October, down from 3.7% in September. And I think a lot of economists and investors and everyone will breathe a bit of a sigh of relief, because this was the first drop that we saw in 4 months. But again, it's been driven by similar factors to what we've seen in the UK, the drop in energy prices over the last year and the easing of food inflation. Also, the Israel-Hamas conflict hasn't led to a spike in oil prices like many had predicted. And of course, higher oil prices can derail inflation's path back down towards more normal levels.
The stock market likes these inflation numbers this week.
Yeah.
The bigger picture, though, looking at it over the sort of medium to longer term, what does this fall in inflation mean for investors? Is it good news?
I think so, judging by the price action that we saw following the US inflation figures, with major risk-on sentiment spurring equities higher and bond yields lower. It looks as though this normalisation of inflation and the potential for central banks to be either at or close to the peak of the rate hiking cycle is positive for stocks, because the risk reward has become considerably less attractive lately, with interest rates where they are and bond yields much higher too.
And we have had a major British name deliver some results today, Burberry. It's not been doing very well this year. Its share price is down by a third before today, since Easter. What were the results like today and how were they received?
Not so great. We've seen that investors have been selling the stock today. Shares were down by 10% at one stage in the morning. It said that it's unlikely to reach its full year growth target of low double-digit growth. It's been hit by the slowdown in luxury spending, and second quarter comparable sales growth came in at 1%. That compares to 18% in the previous quarter, so quite a marked slowdown. But this doesn't necessarily come as a big surprise, because we already had other results in the sector from LVMH and Richemont, which were both very disappointing. So it does really feel as though the blockbuster period for luxury that we saw at the start of the year is beginning to fade.
Thank you, Victoria. That's all for today's Lunch Money. Thank you for watching. You can watch more episodes at thisismoney.co.uk/lunchmoney or on This Is Money's YouTube channel. And don't forget to join us for the next show on Tuesday. Goodbye.